Welcome to the RiskWire webcast. I'm Reena Agrawal, Senior Research Economist at Veros.
And my name is Eric Fox. I'm Chief Economist at Veros.
Well, it's early 2025, and as we settle into the first quarter, I think it's the perfect time to take a pulse on the housing market and look ahead to what we might expect this year. And that brings me to one of the biggest concerns in the housing market right now, that is mortgage rates. Last year, we heard predictions of rates dropping to the low 6% range, maybe even dropping below 6%. But as we all know, that did not pan out. And here we are with a 30-year fixed rate currently hovering around 6.85%. So what's your take on that? Do you think we'll finally see some relief on the mortgage rate front this year?
Well, I think rates might decrease this year, but only very slightly. Veros currently forecasts that the 30-year rate by the end of 2025 is going to be around 6.6%. A prediction that was also made just this week by Fannie Mae. They came out and said by the end of Q4 of 2025, they likewise expected interest rates to be 6.6%. Wells Fargo and the Mortgage Bankers Association projected slightly lower rates within the next year, around 6.5%. So this definitely seems to be a bit of a consensus from the expectation that inflation will persist, potentially limiting the Federal Reserve's actions to perhaps at most a single rate cut during 2025.
So we already talked about our house price forecast in a previous episode. And to remind our viewers, our forecast predicts that on average, home prices will increase by around 2.7% over this year. So this means that even though mortgage rates are high and demand is kind of limited, that the housing market is not going to crash. Of course, some markets will experience some price corrections, but that is not going to be true for all the markets. So going forward, given this high mortgage rate situation with high prices, what is your opinion about supply in the market?
So supply has been slowly increasing. Currently, there's about 3.5 months supply on the market compared to 3 months supply last year at this time. In terms of actual inventory, that translates to around 1.18 million homes on the market. So this is the highest level since January 2020, before COVID, and it means now buyers have more options than they had even a year ago. But even though supply is increasing, it's nowhere near pre-COVID levels. Homes available for sale were more in the range back then of 1.5 to 2 million homes versus the 1.18 million we have today. So we still have a relatively low supply of homes.
You're right about that, and we can expect supply to remain in this range over the next few months at least. And also we can expect foreclosures to remain low in 2025, and that is because around 40% of homeowners own their homes outright, and many others have built sizable equity in their homes. So given that supply is low, demand is still there, mortgage rates are high. So my next question to you is it a good time to buy a house?
Well, with rates high and supply increasing, one would think that prices would decrease. But on average across the U.S., home prices will continue to increase, even though just at very modest levels, as you've indicated earlier. So affordability, unfortunately, is not going to improve in any significant way. So the decision to buy or not buy is going to depend on finances. If your finances are in good shape and you can afford the down payment and monthly mortgage payments, then it's a good time to buy. However, Reena, as you've heard me say many times before, there is never going to be a perfect time to buy a house or to get into the housing market. Everything we're discussing here is in the short term or the medium term in terms of the next few months or the next year or so. But housing is a long-term investment, and it's really never gone down in value when your time horizon is measured in decades, which when you own homes, you have to have some place to live. Decades is typically the unit of measurement. And since mortgage interest is tax deductible, you really can't lose.
So I think to sum it up, we can say it's largely going to be a repeat of 2023 and 2024 unless something changes dramatically in the market. Right now, there is some uncertainty regarding policies and what the impact will be on the economy. There is talk that tariffs might lead to persistent inflation, and there is also talk that maybe unemployment may increase due to federal cuts. So how will the housing market get impacted? We do not know at this point in time. All this will play out over the next few months, over the next couple of years, and we will update our forecasts accordingly. Stay tuned for that.